Welcome to the channel. My name is Nick and I'm a top podder on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel so you don't miss out on all this free content, and I will see you on the charts. In today's video, I will be speaking about USDCHF. Now, as usual, what I will be doing is first covering the technical aspect. We will then go and see what we have when it comes to the COT data. So commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. You also have linked in description the Black Friday month promotion that we're currently running. We have a massive discount, and there is also the possibility to get a full refund of the mentorship program price directly in your trading account, since we have partnered with Blueberry Markets. It's never been this easy to join, so I suggest at least that you go and check it out. So let's start here the analysis. Starting here on the monthly time frame, what do we have? Now here in the monthly, we can see how the market has currently been shifting from having a monthly bearish structure to having a monthly bullish structure. In fact, we went from creating lower lows and lower highs to currently creating higher highs and higher lows. And what we can also see is that the market has been printing a series of higher lows, which indicate that at a certain point we can expect a sharp move to the upside. We also printed this inverted head and shoulders here, so everything from a monthly perspective suggests that more continuation to the upside seems quite possible. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we have a market which had printed this M pattern. Now, in general, after the creation of an M pattern, you want to see the move to the upside for the completion at the neckline, which is the previous support turned resistance. And in fact, that is exactly what the market did. They created the move to the upside, completing the pattern at the neckline, and actually at the moment we are exceeding it to the upside. So we're breaking the resistance, which at that point should be turned support, after which we can expect short-term bearish price action for a retest and then longer-term continuation to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now here on the daily, we can see how strong this move to the upside was. The market created a massive impulse, after which we can expect a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we currently have a 0.32 Fibonacci retracement, which is lining up exactly with this previous daily support here, which was broke to the downside. At that point, it was acting as resistance here. The market now broke it again to the upside. So if the market will create a retest of this support, inside of here we have very strong demand and support, since this is a historical structure level for this market. So if we will get the test, there is definitely the possibility for a rejection to the upside and for the market to complete this impulse correction and impulse pattern to the upside. Now if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing, we can see how we went from having a positive net positioning of 9.6k net positions with 18.5k longs and 8.8k shorts, all the way down to having a negative net positioning of minus 20.6k with 22k shorts and only 1.4k longs on the CHF from an institutional perspective, which obviously makes the CHF quite weak, and we can see that already reflected in the price action. So if we will have a retracement to this zone, there is definitely the possibility for the continuation. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will go and retrace to this area, inside of here what we will be doing with students is monitoring price action from an intraday perspective, so 4 hour and lower. And if the market will shift from an intraday bearish market, as we will have, to an intraday bullish market, at that point we will be adding USDCHF to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long, with a good risk to reward and good probabilities at that point for the move to the upside, and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to potentially provide and create a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.